Have you ever stopped to think that your bank balance today is a direct reflection of how you view money? Two people can earn exactly the same salary, but one lives in debt and worry, while the other finds ways to multiply their earnings and build a prosperous future. The difference between them isn't in how much they earn, but in how they think and act when it comes to money. People who achieve wealth aren't stuck with the idea of only paying bills and surviving until the end of the month. They see money as a tool to grow, invest, and create new opportunities. While many say, "I don't have the money for that," they ask, "How can I make this happen?" This small shift in thinking can completely transform your financial life. Have you noticed that those who complain the most about a lack of money are usually the ones who take the least action to change that situation? Sticking to a scarcity mindset only reinforces the problems. If you truly want to get rich, you need to stop seeing money as an enemy and start viewing it as an ally. Now tell me, is this content helping you? If so, leave a like and subscribe to the channel. That way, you support our work and receive more valuable tips to transform your financial life. Back to our topic, replace limiting beliefs with a growth mindset. Instead of saying, "Money doesn't bring happiness," think of it as bringing freedom. Instead of believing that only those born rich can prosper, understand that anyone can build wealth with the right choices. So, if you want to change your financial life in 2025, start by changing your mindset today, because your bank account tomorrow will be the reflection of the decisions you make now. Have you heard the phrase, "It's not how much you earn, but how you spend it"? Well, many people believe that they will only improve their life when they start earning more money. But the truth is that what really makes the difference is how they manage what they already have. Think about this. If someone earning a high salary spends everything, or even more than they earn, that person will never have financial stability. On the other hand, someone who earns less but knows how to manage their resources can build a prosperous future. The secret isn't in the amount, but in the control. The first step is to identify and eliminate unnecessary expenses. Have you stopped to analyze where your money is going? Small, daily expenses, such as frequent delivery orders, subscriptions you don't even use, and impulsive purchases could be sabotaging your financial life without you realizing it. Here's an essential point. You need to have an emergency fund. This means saving enough money to cover at least 3 to 6 months of essential expenses. That way, if an unexpected event arises, like a job loss or health problem, you won't need to rely on loans or credit cards, which can become a snowball effect. If you really want to get out of poverty and achieve financial freedom, I have a special gift for you. In my ebook, How to Get Rich Even with a Low Salary, I teach practical strategies to save, invest, and increase your income, even in challenging times. And the best part, I'll show you the way. But be careful, there are limited units, so secure yours now before it's gone. Remember, knowledge can help you build your wealth faster. Click on the pinned link in the comments and grab yours now. Continuing. Financial control doesn't mean living a life of deprivation, but rather making smart decisions. When you learn to spend consciously, you can make much better use of your money. After all, it's no use earning more if you keep spending without planning. If there's something that can destroy your chances of getting rich, it's the accumulation of unproductive debt. But what does that mean? Basically, it's those installment purchases that drain your money without providing any financial return. A new cell phone, a top-of-the-line TV, a financed car beyond what you can afford. These all seem harmless at first, but over time, they turn into a financial trap. The logic is simple. If you can't pay up front, it means you can't afford it yet. The problem is that many people fall for the illusion of easy installments. But guess what? Interest rates and hidden fees make you pay much more than the actual price of the product. In other words, you're paying to get poorer. Now think with me. Have you ever stopped to calculate how much interest you've paid in the last few years? If you added up that amount, would it be enough to invest or do something far more useful for your future? The problem with unproductive debt is that it makes you work to pay bills instead of making your money work for you. The only debt that might be worth it is one that generates a return, such as an investment in education or your own business. But even in those cases, careful planning is needed. If the debt you're about to take on won't bring you financial benefits in the future, think twice before committing to it. Another essential point when it comes to multiplying income is knowing how to take advantage of the opportunities already around you. Often, the chance to increase your earnings is right in front of you, but due to lack of knowledge or even fear of taking risks, you let it slip by. Think about your own job. Is there a possibility to earn more without needing to change companies? Perhaps you could specialize, take on new responsibilities, or even negotiate a raise. Many people spend years in the same position without even trying to improve their own situation. But those who get rich don't wait for opportunities to fall from the sky. They go after them. If you deliver more than expected, you become indispensable. And when that happens, your appreciation is a consequence. Now, let's say your job doesn't offer many opportunities for growth. In that case, it's time to expand your vision. The market has changed a lot in recent years, and today there are countless ways to earn money beyond traditional work. For example, have you noticed how the internet is creating new opportunities? Every day, ordinary people are making thousands by selling products as affiliates, creating relevant content, or even teaching what they know. And you don't need to be an expert to start. If you are knowledgeable about a subject, whether it's cooking, crafts, languages, technology, or even home organization, there's someone willing to pay to learn from you. If you still have doubts about which path to follow, a good strategy is to observe what others are doing and adapt it to your reality. Is there someone in your circle of contacts already earning money in a way that you could explore too? Talking to people with more experience can open doors you never imagined. Another common mistake is thinking that to make more money, you need to work more hours. This is not always true. What really makes a difference is working smart. A well-structured business can generate income even while you sleep. A good investment can grow without you needing to manage it every day. The secret is making strategic choices. And when it comes to investment, many people imagine it to be something inaccessible or risky, but the reality is different. You don't need thousands of REAs to get started. Today, with less than $50, it's possible to make investments that yield more than a savings account. Investment funds, stocks, and even fixed income options can help you multiply your earnings over time. The most important thing is to learn before investing. Read, study, seek knowledge to avoid mistakes that could cause you to lose money. Another point that can make a big difference is using your time productively. If after work you spend hours watching TV or scrolling through social media feeds, think about this. What if you used at least part of that time to learn a new skill? What if you dedicated 1 hour a day to creating an extra income source? Small changes in your routine can bring impressive results in just a few months. And remember, no big change happens overnight. Multiplying your income requires dedication, learning, and patience. But those who start today will reap the rewards in the future. If you really want to achieve financial independence and ensure a peaceful future, it's essential that you start investing as soon as possible. This doesn't necessarily mean putting large amounts into high-risk assets, but rather creating a strategic plan to make your money work for you. And here's the big takeaway. What you invest today can secure a financially safer and more comfortable future tomorrow. Remember, Knowledge can help you build your wealth faster. Many people have a misconception about investing. They believe they need a fortune to start, or that investing is something complex and full of secrets. The truth is that anyone can start investing with little money, and the most important thing is to take the first step, even with small amounts. The secret is to start early. Now imagine this. You start investing $200 per month in an investment fund. It may seem like a small amount, but if you let that money grow over 10, 20, or 30 years with an average return of 8% per year, the result can be surprising. It's not magic. It's the power of compound interest, and the sooner you start, the more time your money will have to grow. But before you start investing any amount, it's important to educate yourself financially. Many people enter the investment market without understanding the basics of how it works and end up losing money. That's why it's important to learn about the different types of investments available: investment funds, stocks, fixed income, real estate, etc. Each has its own characteristics and risks, but with knowledge, you can identify what is most suitable for your profile. In addition, investing is not just about money, it's also about time and energy. Investing in your education, acquiring new skills, expanding your knowledge, and learning new ways to generate wealth can, in the long run, be the biggest investment you make. For example, specialization courses, languages, or even learning to use digital tools can open doors to new opportunities and significantly increase your earning potential. Another important tip is to start diversifying your investments. Don't put all your resources in one place. Diversifying means spreading your money across different types of assets, which helps reduce risks. If one area of investment performs poorly, the others can compensate. This way, you create a safety net for your financial future. And even though investing in your future is essential, it's also important to maintain a balance between short, medium, and long-term goals. While thinking long-term, you can also start investing in something more immediate, such as a financial emergency fund, or even opportunities to earn money more quickly. The secret is not waiting for a perfect moment, but taking action as soon as possible. Finally, remember that investing is not a sprint, but a marathon. The money you put to work today will yield results down the line, but that requires patience and consistency. Now that you've learned how to multiply your income and start investing in your future, it's time to understand one of the most important aspects of any financial journey: protecting what you've built. Having a good protection strategy is just as crucial as making money, because without it, everything you've worked for can be lost quickly due to unforeseen circumstances or unexpected situations. The first way to protect your assets is by creating an emergency fund. This fund is your safety reserve for urgent situations such as job loss, unexpected medical expenses, or urgent repairs to your home or car. The goal of an emergency fund is to ensure that you have money available to protect yourself without resorting to debt. But how much should you reserve for this fund? Ideally, you should have 3 to 6 months' worth of essential expenses saved. This includes rent, utility bills, food, and other basic expenses. This amount may seem a bit high, but remember that it's an investment in your peace of mind and financial security. Another important aspect of protecting your assets is life and property insurance. Many people don't think about this until it's too late, but a proper life insurance policy can protect your loved ones in case something happens to you. Additionally, home or car insurance can save you from significant losses in case of accidents or unexpected events. Another way to protect what you've earned is through investment diversification. It's not healthy to concentrate all your money in one type of investment. For example, if you invest exclusively in stocks and the market declines, you could end up losing a significant portion of your wealth. Diversifying means spreading your investments across different asset classes, such as fixed income, real estate funds, stocks, among others. This way, if one sector or type of investment isn't performing well, the others can help protect you from major losses. We must also not forget about legal protection. If you have significant assets, such as real estate or businesses, it's essential to think about how to legally protect what you own. Consulting a lawyer for guidance on estate planning, wills, or creating a company to protect your assets can be a good strategy to prevent something you've worked hard for from being compromised by legal or family issues in the future. And finally, it is worth investing in continuous financial education. The economy and laws are always changing, and it's important to stay informed so you're not caught by surprise. Financial education should not be a one-time effort, but a constant practice. The more you know about financial protection, the better prepared you will be to face challenges that may arise. Remember, protecting your assets is not just about avoiding losses, but also ensuring that what you have continues to grow safely. If you follow these strategies, you will feel more at ease, knowing that even in the face of unforeseen circumstances, you have a financial safety net to deal with any situation. Financial education is the foundation for any lasting financial success. If you don't understand how money works, how it can be invested, or how it can be protected, it will be very difficult to achieve any kind of wealth or stability. This doesn't mean you need to be a financial expert, but rather that you should acquire the basic knowledge to make informed decisions. Click on the link pinned in the comments and get your ebook before the units run out. Continuing. The good news is that educating yourself financially doesn't have to be complicated. With access to the internet and a wealth of free and paid resources, you can start learning about budgeting, investments, and even how to avoid financial traps. Start understanding how finances work in your country, learn about interest rates, inflation, investment diversification, taxes, and savings. Moreover, it's essential that you understand the concept of cash flow. This term refers to the amount of money that comes in and out of your life. Keeping a strict control of your cash flow is crucial, as it allows you to better understand your consumption habits and where you can improve. Once you understand where you are spending more than you should, it will be easier to correct the course and start saving or investing more wisely. Investing in your financial education is a direct investment in your financial future. The more you learn, the more capable you become of making smart financial decisions and achieving your goals. Therefore, don't underestimate the power of continuous learning. It could be the key to ensuring a peaceful and prosperous future. Setting financial goals is essential for anyone who wants to build wealth consistently. It's not just about dreaming of a stable financial life, but about setting concrete goals that can be monitored, adjusted, and achieved. Without goals, it's easy to get lost in the process, make impulsive choices, and eventually stray from your bigger objective. To get started, set short, medium, and long-term goals. Short-term goals might be small achievements, like paying off a specific debt or saving for a trip. Medium-term goals could involve buying a property or building a solid emergency fund. Long-term goals might include retirement, starting your own business, or securing your children's education. The key to setting these goals is to ensure they are realistic and specific. For example, instead of just saying, "I want to save more," make it more detailed and measurable, such as, "I want to save $10,000 in the next 12 months. This way, you will have a concrete goal to follow and can track your progress. Additionally, break down large goals into smaller, achievable goals. This creates a sense of constant progress and prevents discouragement from the size of the final goal. If your goal is to save for a new car, break it down into steps, like saving a specific amount each month. Don't forget to review your goals periodically. As your financial situation changes, it may be necessary to adjust these goals. If you've achieved a goal faster than expected, congratulations. Use this success to adjust your next steps or even accelerate your plans. Diversification is a central concept in the world of investments, and it plays a crucial role for anyone looking to grow their wealth and protect their assets over time. Diversifying your investments means not putting all your eggs in one basket. In other words, by spreading your investments across different types of assets, such as stocks, real estate, investment funds, and even commodities, you reduce the risk of losing money in case one market drops. Imagine that you decide to invest everything in the stock of a specific company. If that company faces financial troubles or the stock market in general drops, your investment will be directly impacted. However, if you diversify, your exposure to those risks is minimized. For example, if you also have investments in real estate or in a fixed income fund, these assets may behave differently, helping to balance your portfolio. Diversification isn't just about different types of assets, but also across sectors and even geographically. You can choose to invest in stocks from different sectors, such as technology, healthcare and energy, or even in international markets. This strategy helps ensure that if a sector or country faces economic difficulties, the impact on your portfolio will be smaller. A good starting point for beginners is to look for index funds, ETFs, or mutual funds, which already have a diversified portfolio. These funds allow you to invest in a mix of stocks and other assets without having to individually choose each one. By diversifying your investments, you decrease the risk of significant losses and increase the chances of steady returns. Of course, no investment is 100% safe, but with a solid diversification strategy, your chances of success are much higher. This is a crucial step for anyone wanting to see their money grow in a sustainable and secure way over time. Last but not least, it is necessary to keep learning and adapting along your financial journey. The world of finance is constantly changing, and what works today might not be as effective in the future. Therefore, it is essential that you are always updating your knowledge, looking for new ways to optimize your finances, and staying informed about economic trends, new investment opportunities, and financial planning strategies. Investing in continuous learning doesn't just mean seeking information about investments, but also about personal development. The ability to make good financial decisions also depends on your ability to control your emotions and behaviors. Often, the difference between those who succeed and those who don't is learning from mistakes and not allowing difficulties to discourage you. Being open to learning and adapting will allow you to identify new opportunities, improve your strategies, and stay on track without losing sight of your financial goals. Remember, the process is continuous, and you are always evolving. And if you know someone who also needs this knowledge to improve their financial life and start building the wealth they've always dreamed of, share this video with them. It could be the beginning of a big change for that person. After all, we all deserve the tools and knowledge to reach our financial goals. Let's spread this message of transformation. Don't forget to like, subscribe to the channel, and share with your friends. Together, we can achieve more success and prosperity. See you in the next video.